Good afternoon, everyone, and welcome to Recruiting in Times of Layoffs. Unless you've been under a rock or fortunate enough to be on an extended vacation away from media, you've been hearing about layoffs in the news. You experienced it yourself or through someone you know. The struggle is real, the frustration is real, the worry, the pain, but there's always another side of the story, a side you didn't hear about or you didn't know about. In this webinar, we will hear from frontline leaders about what is happening exactly in the talent landscape. This is Lamis Aburama with the Recruitment Process Outsourcing Association. I'll be the moderator for today's RPOA expert panel, one of two webinar series hosted by the RPOA. I'm honored to have an esteemed panel of talent experts for today's discussion. First, it's my pleasure to introduce Rob Navarrete, a frequent speaker and contributor to RPOA Thought Leadership. Rob is the Global Head of Global Service Delivery, Recruitment and Transformation, Technology and Operations for WTW. In his role, Rob leads a team of recruitment professionals and partner with business and HR executives in Asia Pacific, Europe, and the Americas responsible for hiring globally. His team is composed of highly talented in-house recruiters and recruitment leaders across a global footprint. Hi, Rob, and welcome.
Hello, Mace.
Where are you joining us from today?
I'm joining you from Toronto, Canada.
Excellent. Welcome.
Next,
it's my pleasure to introduce Zach Chertok, a research manager of employee experience for IDC, a world's leading provider of technology intelligence. In his role, Zach oversees a pipeline of thought leadership research covering and serving employee experience. He constructs and reports on market surveys, market cap analysis, and emerging value models covering employee experience. Zach is also an adjunct associate at Columbia University in New York City, where he supports course planning and delivery in the Human Capital Management Department. Zach, welcome back to the RPOA webinar series. Where are you joining us from?
From Boston, Massachusetts.
Excellent, and welcome. Next, Trent Cotton. He's Vice President of Talent and Culture at Hatchworks. In his role, Trent is responsible for talent strategy, including acquisition, retention, learning, and development. Trent is the author of Sprint Recruiting, a methodology intended to create more raving candidates and more happy clients. You can find his book on Amazon and also on sprintrecruiting.com. Trent is a fierce leader who pinpoints daring as the most critical quality to leading transformation. Welcome, Trent.
Hey there, how are you? I wouldn't know about fierce, but maybe my delivery is fierce.
Awesome. And where are you joining us from?
Atlanta.
Atlanta, welcome. Last but not least, Kelly Burledge is Vice President, Global Talent Acquisition at Lineage Logistics. She's an experienced global talent acquisition leader with a demonstrated history of working in the logistics and supply chain industry, pharmaceutical and healthcare industry, respectively. She's a strong human resources professional, skilled in management, interviewing, recruiting, training, investigations, and all things HR. Kelly currently serves as a board member for an AI sourcing technology, Higher Wells, and previously spent 3 years running Disrupt HR Chicago. In spring of 2022, Kelly was named top 100 most influential TA leader by TA Tech. Welcome, Kelly. Where are you joining us from?
Thank you, from cloudy Chicago. Nice to see you today.
Thank you. And I'm here in Richmond, Virginia. Welcome all to the panel and welcome to our audience. Before we get into our discussion, I wanted to provide an understanding of where the speakers are coming from in terms of industry and hiring scope. So Trent, I will start with you. Tell us about Hatchworks and your annual hiring scope, numbers, type of hire, geography, please.
Got it. All right. So we are a technology solutions provider. So we work with a lot of large clients that want to build technology solutions, digital products that are gained or kind of garnered toward increasing revenue, client engagement. We also do a lot of modernization projects. So we kind of go in and do agile teams, help them build out the product and then scope out. So kind of like SWAT teams. And we're all throughout Latin America and the US. So I've got several different spheres that I keep my hands in, try to keep abreast of some of the economic changes. So as an agency, we are, or as a company, excuse me, we are about 200 employees strong. We're considered a high growth company. So we're looking to almost double in revenue this year. And the best way that we make money is whenever we have people on projects. So scope of hire kind of changes. Yesterday I found out it could be 200 this year, which is not a lot compared to some of the other companies that I've worked for, but for the kind of the scale of what we're doing is pretty large and pretty intricate.
Thank you. And I'm going to ask Kelly and then Rob. Kelly, tell us about Lineage and your hiring.
Sure. Lineage Logistics, I like to say, is the largest company that no one knows about. We are responsible for transforming the food supply chain, eliminating waste, and helping feed the world. So in short, if you've eaten anything refrigerated or frozen, chances are it's come through Lineage to get to your table safely. Our hiring volume, it's always a moving target, right? But it's going to climb this year from primarily M&A activity, but also due to expansions and greenfields. Therefore, this year, our volumes are expected to hit right around 15,000 hires. We are an organization that has around 400, right now, 441 facilities in about 20 different countries. And traditionally, our roles are broken up into frontline warehouse positions, engineering, corporate, and professional roles, respectively.
Kelly, in terms of geography, you're not US only. Where is your hiring?
Everywhere. United States is the biggest bulk of our hiring. We've just recently acquired an organization in Canada, but we're in Australia, New Zealand, Sri Lanka, Singapore, Vietnam, Germany, Belgium, France, Spain. I'm missing a bunch, but Poland, Norway, the UK, to just name a few, and quickly growing outside of that footprint as well.
Excellent, thank you.
Sure.
And Rob, how about WTW?
Yeah, sure, everybody. So again, Rob Navarrete, based in Toronto. I'm from WTW, which is a global company. We're in about 140 countries worldwide, about 46,000 employees. And we did last year about just under 10,000 hires. We focus in on people, risk management, human capital management, insurance, and broking space. If you're in the industry, you've heard of us before, but perhaps if you're not in the industry, you haven't. But we've insured things like the Titanic because we have been around that long. I oversee recruiting on a global level. And a lot of our positions are in the actuarial space, broking, insurance, and we do some technical hiring as well.
Excellent, thank you. And geography, I guess you mentioned you're also global, worldwide.
Yes.
Very good. Zach, my question for you is slightly different because we want to help the audience understand the expertise and IDC's competencies. So tell us about IDC in general and the research that you do in talent acquisition in particular.
Sure. So IDC is a global research firm focusing on trends in the technology and consultative services market. So we look at all things digital transformation, not just limited to human capital management, but across a wide range of digital services and digital transformation methodologies. We publish a wide range of materials from maturity models for how organizations move through their structural guidance, all the way through to external market reporting to help guide, things like how trends in the labor market are impacting organizational design and providing guidance for investors as well. In my realm within IDC, while I primarily focus on employee experience, I connect in with two other colleagues on topics in talent acquisition, workforce management, and workforce planning. And I come to IDC with a background of 15 years analyzing and looking at different trends for different stakeholders across all things HCM and labor market planning and just in general how people are moving.
Excellent. So this is a good overview just in terms of perspective from where the panelists are coming from. And I shared this with the panelists on our planning. One of the things we're doing with this panel is painting the big picture of the talent landscape, telling the whole story from the employer tale. And what's wonderful about the panel, you have the technology side, financial, you have food services, and then we have the analysts. So in this next question, we want to hear from their lens. What we're hearing in the news is the thousands of layoffs in the technology space in particular, but it's also expanding into other sectors. You hear companies in the news sector like NPR, consulting firms like McKinsey also announcing layoffs this year. At the same time, the job report in January comes out with showing over 500,000 jobs added to the economy. In February, it's over 300,000. There's a shifting dynamic in the economy. We all know it's largely driven by the increased interest rates imposed by the Fed in an effort to get inflation under control. And it's causing things to break, as we've seen. But that is a different chapter of the story we're not going to cover today. The story we want to cover is specifically in talent acquisition. So the question is for all the panelists, and just to give you a head start, I'll probably start with Rob, then go to Trent, and then Kelly. I want to ask you about your hiring demand, and you hinted to this. How did that change in your company, in the industry, and give us the bigger picture, probably since the pandemic. How did that hiring demand change, and what is driving this change? So starting, Rob, please.
Yeah, sure, absolutely. So interestingly enough, our industry is actually fairly resilient during times of economic decline, like recessions, et cetera. So we haven't necessarily been as impacted during the pandemic, but also, I'm not sure if you heard, but we were also going through a proposed acquisition with another company. And as a result of that, we were impacted quite a bit from a hiring demand perspective. As you can imagine, two large companies together, that impacted us. So it was hard to really differentiate between, was this as a result of the pandemic or was this as a result of the merger itself? But as I said, generally speaking, we're fairly resilient. What did allow us, what we were able to do, because the merger didn't actually end up going through, it collapsed. And since then, we've been going through a transformation. Now it's one WTW, one company, and what we've been able to do is really build pipelines. Right, everyone was impacted by things like the Great Resignation last year. We were not alone in that, and so we worked really, really hard to scale up our team. Our hiring demand did decline by about 80% at one point, and so then we had to rehire a lot of people. So we did hire some boomerangs, and we took the opportunity to target some other companies and bring on talent. And now in the technical space, and as an example, to your comment, there's been a lot of layoffs in some of the key markets, like North America in particular, as you suggested. For us, we're doing a lot of hiring in some of our offshore locations. So Asia in particular, India, Manila, Mexico City, we're doing a lot of technical hiring there, where it is still quite competitive. So we haven't seen quite a bit of an impact of the layoffs there. In fact, arguably, it's become even more competitive. This past year, I would say things are showing signs it's a little bit better. We're not seeing as many people ghosting us anymore, although it still exists. And we are also not seeing as many people just not start. Last year, we certainly saw a lot of people accepting offers and then ultimately not joining. So there's been a bit of a shift.
Excellent. And Rob, I don't know, I guess we can comment on more details. I was going to ask you about your internal team and if that fluctuated, but we can take that in the next question. Let's go to Trent. And Trent, what have you seen from your end in terms of changing in hiring demand? Trent, you want to unmute, please?
Sorry about that. I have a Frenchie that whenever I get on panels, she decides that that's the time to bark. So I muted myself. In the tech space, it's really interesting. One of the things that I do in my role is I provide kind of like an economic overview for leadership as it relates to talent. And one of the interesting statistics that you hinted at earlier is, yes, there was a time in January, February, I think it was an average of 1,600 people in tech alone in the US were being laid off. The number of jobs that were being added, almost, there was not even a ripple in the number of people without a job that are in the tech space, which is kind of an anomaly. If you're looking over economic trends over time, usually there's this mass layoffs, so the supply increases. At the same time, people start cutting jobs. But in reality, there was such a deficit in talent related to the number of open jobs that the number of open jobs actually absorbed it. So we're not seeing this massive pool of candidates in the US that we can just go and pick off. What I am seeing, just because of the type of work that we do, is that a lot of companies are looking at specifically modernization. So we've kind of coined the phrase, instead of MVP, minimal viable product in Agile, we're going after minimal viable replacement. So as the economy shifts, a lot of companies still need to work on their modernization, maybe not the new fancy toys, but there's still some core modernization projects that they need to get done. And that they will still fund regardless of what's going on in the economy. So as we've started to kind of shift that way, you know, we've been able to go and work with a lot of companies that say we can't really afford the US rates, but we still need to get this done. So for us, it's kind of nice because we can blend teams. We can have part in the US, but we can have part in Latin America, and we're not sacrificing quality. But then also for a lot of Agile shops, whenever they do offshore, it's, you know, they work here and they batch process the information. The other side of the team goes in and tests. And so it's not truly Agile. We're able to do it because we're all in the same time zone. So it's just kind of working in the Southern hemisphere versus the Northern hemisphere, but all of us are in the Western. So we've started to see a little bit of pullback, but not to the degree that I would think, hearing all of the doom and gloom. And I know in our prep call that, you know, we all kind of talked about some of these mixed signals that the economy is giving, increased job reports, but you know, the Fed's trying to figure out what the hell it's going to do with the rate. Are we slowing down inflation, or do we need to back off the slowdown? But then you also got, you know, the consumer spending has not changed, especially in the upper echelon. So it's really kind of, I call it the green stop sign whenever people ask me what's going on in the talent world. It's like, kind of stop, you'll go, who the hell knows? But I haven't seen a huge impact like I thought I would, based on the information that's coming out.
So I think you hinted to this trend in your opening. Do you keep changing your hiring outlook for the year? Is that an active dynamic?
Yeah, it's an active dynamic. It is driven primarily by our demand or the demand of our services. In some areas, it's going at a 45-degree angle, but then some of the other projects that we've been working on for a while, you know, they're looking for cost cutting. And I was a practitioner in a large company. The first place I would always cut is contractors, very expensive resource. So, you know, as one is going down, the other one's going up. As long as we keep that at some type of an equilibrium, I think we'll be okay.
Very good. And I saw Zach shaking his head. I think he's agreeing with, he's keen to get on the conversation. I'll give you that chance after we hear from Kelly, Zach. So Kelly, let's talk about your hiring and how that changed for Lineage this year, but also that big picture through the pandemic.
It was funny. The other day something came up on a memory. It said 3 years ago what you were doing, and I had posted something to the effect of just trying to keep everyone alive today, and it was trying to teach my daughter her school while do my job. And I thought, wow, how far we've come from where we are today versus 3 years ago. However, we're still very much in this strange, volatile, confusing marketplace that we're all trying to comfortably navigate. I said earlier, we're all looking and have this thirst for knowledge to have this silver bullet of answers of what we're going to experience. Trent alluded to some of them. From a big picture perspective, we've all seen these crazy graphs that have shown the contraction and the volatility and hitting record lows and highs, and then the subsequent turnover and subsequent job creation as a result of that. Some economic indicators are obviously showing some changes with interest rates as of yesterday, supply and demand changing. It's going to be a very interesting year, anticipating that although unemployment is going to continue to rise, and they're anticipating maybe, I don't know, 4.7 to 5.1%. I know someone on this call is going to keep me honest with that number. So it's this constant confusion, stop, go. Rob alluded to it as well. I think from a Lineage perspective, we have been very grateful because we have not been hit by a lot of these changes, because a lot of times when the market shifts, food consumption and choices that people make in terms of what they eat changes. So as an example, someone might not order steak and lobster, they may order cheeseburgers, but that, you know, people still have to eat. So we're in a unique situation that will still provide that as a vehicle. I think the biggest thing for us is a focus on retention, and making sure that we are, you know, watching retention and making sure that that's just as important as our recruiting efforts. In fact, more important based on the efficiency and productivity that you see with people within their roles. The other big thing for us, Umis, that we're watching is just the overall supply and demand that's shifting for certain roles. Obviously, on the warehouse side, it's been a very competitive year of competing with organizations like the Amazons of the world. However, we're still seeing it's difficult to recruit, as Rob also alluded to, for other positions in certain key markets. In Spain and the UK and in the Netherlands, it's very difficult for us to find top talent within finance and accounting and technology roles, because as you all know and have experienced, when these economic changes impact people, they go into kind of a fight or flight mode and they lock it up in terms of wanting to pursue new opportunities, and a lot of times candidate behavior changes. So, you know, with uncertainty that we're seeing, a lot of people's candidate behavior and job moves are going to change pretty significantly, and we're starting to experience some of that here at Lineage.
Very good. And we'll get Zach to comment and provide data. The outlook of the Fed yesterday on unemployment, and you guys can correct me if I'm wrong, the outlook this year is 4.5 and next year 4.6.
Yeah.
So it's gonna, we're still
But it's also the lowest that it's been in 50 years.
Right. Yeah.
And consumer spending jumped to a 2-year high. So that's what I'm saying. Whenever you look at all of these indicators, it's like, okay, where in the hell are we going? And I don't think anybody knows.
Yeah.
Maybe Zach does.
That's right.
No pressure, Zach. No pressure.
No, it's, you know, it's one man's opinion in the room, right? But I've been a bit of a contrarian to sort of what the top down, you know, measurement, folks doing top down measurement are looking at. When we look at what's going on, I think in the talent market from the bottom up, I just ran an analysis, a multi-sector analysis, and what we're seeing is that the dynamics of the talent market are shifting at the same time that the dynamics of industry are shifting, and they're trying to pace off each other. So we've had a lot of the highest skilled talent has been bottled up in, you know, particularly the tech sector for the last 30 or so years, as largely automation has driven industrial change. So that means that you have one sector that could create change, be the dominant economic driver, create markets and sell into them. What that also meant is that as that skilled talent got bottled up behind one or a handful of industries, you have other industries that had to delay their digital transformation or the projects trend that you were talking about, as they had to fight to hold on to talent that was due to age out of the workforce because they couldn't modernize or update roles or even machinery or mechanisms or processes because they couldn't get the new talent. Now in the, you know, COVID kind of gave us this weird bump where some industries benefited over others, but now that we're kind of coming back to it, we're seeing some of the same bifurcations in the market. So you've got that upper tier that's spending, that lower tier that's getting hurt by rising interest rates as credit tightens. But at the same time, the rising interest rates are forcing industries like particularly tech to think about business efficiency because they can't leverage out to continue bloated operational models. So they're releasing some of that talent into the market, cleaning up after M&A, cleaning up after rapid expansion to serve COVID. And that skilled talent now is becoming rapidly available to industries that had to stave off modernization because they couldn't access it. So now we're seeing that pace of modernization, yes, be a little regulated by interest rates, but also being regulated by how quickly these companies can snap up that skilled talent to guide their transformation. I pull the example of General Motors all the time. No way could a company the size of General Motors commit to modernization in their plants through additive manufacturing and shift to electric grid infrastructure in a 5-year timeline if they couldn't buy out the 58,000 contracts they extended off the workforce due to retire and bring in that skilled talent at the same time. So we're seeing sectoral movement of skilled talent that's been bottled up inside a handful of industries. And so you have these trains that are moving in parallel to each other, but trying to pace off each other at the same time. And consequently, you have a lot of demand-driven inflation that can't really be solved by supply-side mechanics. So, as interest rates rise, I would encourage industries to recognize it's not the 80s. We're not dealing with 22% interest. 5% is really still not that much. But at the same time, that is going to slow down the rate of transformation rather than keep it, help it keep pace with it and sustain some of these employment numbers. But still, 4.6 unemployment is not that big a deal. It's not that big a number.
No, and two, the more the interest rates continue to go up as as the Fed's trying to, it's like they're fixing one side of the house and they're screwing the other side, which is typical economic policy because you only have a couple of levers to pull. But as they try to constrain that and drive up the interest rates, then you're creating a constraint on businesses and their access to cash to be able to do investments to be able to grow. But so that's one sector of it. And maybe I'm just an eternal optimist, or I try to shift my mindset to go, okay, what's the positive out of this? Let's go back to 2008. Now that was a crapshoot, right? And it happened incredibly fast. The dominoes fell quicker than we could try to read the tea leaves. We don't have that right now. We're just trying to read the tea leaves to figure out what's going to be that next domino. But coming out of 2008, to Zach's point, there was a lot of talent trapped, and specifically in tech and in certain different little pockets. Those pockets had to bleed out. And guess what came as a result? Uber, founded in 2008. Square, founded in 2009. So, there was an economic boom that came out of the austerity of, kind of the talent space. It forced a lot of these people who had this technological acumen to kind of go, okay, well, I don't really want to go and do that again. I want to go and create something else. So I think that, I think you used the analogy of the two trains. I think there's a third that we're not seeing that's going to be this entrepreneurial led funding of talent in the market. And to me, that's exciting because it's like, what's coming next? Uber blew our mind. And now we can't think of, I live in Atlanta, and as much as I like to go out, I can't imagine not having Uber. Actually, every time I get an Uber, I'm like, how in the world did I drive leaving a bar for so long? This is so, so much safer, but that's a commodity now. I'm excited to see 5 years from now, as a result of what we're going through here, what's going to be the new commodity that I can't even fathom right now.
And I think the frustrating part right now is because industry transformation really wants to move quickly because it's been held back for so many years, and interest rates are just slowing it down. So it's a painful, it's a painful pacing. So whether you're looking for market opportunities or talent opportunities, it's just painfully being slowed down. But what's encouraging, and Trent, I'll feed off your optimism a little, is some of these industries, manufacturing, even public sector, healthcare, that are being able to transform by leveraging some of this IT and technical talent that's been held up and stuck in certain industries, are ones that create pathways to wealth growth for the initial person starting out. So some of that economic bifurcation we've experienced in the long run leading into 2019 and into 2020 paused a bit during the pandemic, but is kind of returning. has an opportunity here to also close.
Mhm. And two, I think there's just like in the housing market, things burn. I think it was last year, there was little to no inventory in Atlanta, and most of the inventory that was out there, that people were paying $40,000 and $50,000 over the asking price, which is driving up, falsely driving up the property value. Same thing happens in the talent market. The reason that a lot of companies in 2020 started looking to firms like mine to say, okay, I still need to get this done, but I cannot afford the salary cap or the salary average of the tech employee in the United States because it's here, but their acumen and the quality of what they're going to bring is here. There's a gap that I can't justify. So they started looking south, or they started looking offshore. So I think that too, as we start to see the salaries get a little bit more in line and a little bit more realistic, you're going to start to see hiring in the US go up because they're going to be able to afford it. Because right now they're cash strapped, because of inaccess or the lack of access to price worthy money. So that's one cap. And then they're also looking at, they've got the caviar budget and they're looking at, we need a Porsche.
Right.
I think essentially the Porsche is going to come down to maybe an Acura, and they'll be able to finance the Acura soon.
I don't want to
No
dominate.
offense to anyone, no offense to anyone that drives an Acura or anything else. It's just those are the first two that came to mind.
And I don't want to dominate the conversation because Kelly and Rob, I'm definitely interested to hear from your perspective more on definitely on the industry side, but across the numbers that we've looked at IDC, we've seen about 64% of the industrial sectors are moving to revamp their segmented approach to talent acquisition strategy as a result of this, and really look at each of the components and how they source, how they screen, but really trying to connect sourcing and identification as close to hiring and accepted offers as much as possible, which is where that strategy is coming in. And as a result, 47% of those 64% are actively engaging with recruitment process outsourcers. They're seeking that strategic partner that will be able to close the deal versus just create a pipeline of candidates.
Thank you, Zach. And I do want to bring the conversation back to strategy. This is very insightful discussion about the dynamic in the talent market. And Rob, I want to start with you. You mentioned that your business in particular was or is recession proof, but what does that the dynamic in the market is not. What does that mean to your talent acquisition strategy? How is that changing? How are you keeping up with all these moving targets, if you will?
Yeah, sure, absolutely. So I don't know if I would quite say recession proof, but we are a resilient company. There certainly is a level of impact. It would be nice to be fully recession proof, but in fact, we're not. But to the comments earlier raised, I mean, the cost of labor in markets like the Americas, or North America in particular, is just unsustainable, right? Which is why we've expanded in our offshore locations to look for the same type of talent. And let's face it, you could potentially hire 3 or 4 resources for the cost of one resource in North America, as an example, right? But it is very competitive, right? We are not the only company looking to do this, and so we are in these markets, and so too are other companies. And so you think about tech professionals who are sometimes receiving several offers, and in markets like Europe and in Asia, our notice periods are significantly longer than in the Americas, right? And so there's that much more risk associated with whether this candidate will truly start. And so what we try to do is deploy a very, very warm or hot candidate experience to really keep them engaged. We get hiring managers to pick up the phone, get them involved, really show an authentic side, to really make sure that they understand that here at WTW, they're going to be treated like an appreciated, respected professional where they can build a career path. And what we're doing in these locations is really making sure that that's clear, right? So we're getting the right people, doing the right work in the right locations, and have a clear career path where they can actually grow as professionals. I think you're on mute there, Louise.
Thank you. And I know you commented about seeing less ghosting this year than previously, so hopefully that's also a good sign.
I think so. We're hoping, although I think many companies are issuing their bonus periods around this time frame, and so we're waiting to see the impact of that. So we'll see what comes.
Kelly, how about you? What are you seeing in terms of the talent strategy? Did that change for you? I know during COVID, there was the great resignation, and that had a big impact on many companies. We're hearing now that there is more, the participation in the labor market is improving. Are you seeing any of that? And how is that impacting your strategy?
Yeah, I can totally relate to the ghosting. We've had several conversations about what the heck is going on with candidates. Where did they go? Where are they going? I love to look at the labor market analysis around individuals that are ready for work, and you compare that with who's actually looking for work. And I don't, that disparity is a real head scratcher sometimes. You know, in my mind, our strategy has had to evolve. I think we can all relate to the fact that if you don't change your strategy, you're dead in the water. I was on a panel a few months ago, and someone on the panel referred to making sure you were getting the hearts and minds of people. And I think everyone talks about EVP. I know Trent's a huge proponent of it. Have him tell you the Notre Dame bench story someday. It's a heartfelt, wonderful story. But I think at the end of the day, the foundational layer of having to advance our talent acquisition strategy is really all around adaptation and innovation. And to me, that really sits with building a high performing team. So we can have the best strategy on the face of the earth, but without the hearts and the minds of the people that you hire that are executing what you want to do and what you think is the right way to do, you're dead. And, you know, I've always said, and I know everyone on this call can relate to this, but that, you know, your biggest asset within an organization is its people. And I think over the last year, we've all seen that the right talent acquisition strategy and having talent acquisition and recruiters and metrics and goals, without them, sales can sell all they want, but they don't have humans to do the work. So we won't see profitability. And so what we've seen over the last year is just the constant need to evolve how we're finding candidates, how we're building relationships, how we're identifying, and not only how, but what we're saying and why we're saying it to get people excited about why they want to come to work here. We've seen a huge shift of people wanting to have a meaningful impact in what they do and wanting to be connected to the mission and the value of the organization. And while the recruiting team can solve, you know, really great recruiting challenges, if they can't get people excited about the work that they do with this organization or others, you're going to see huge turnover and huge retention issues. I think the last, you know, thing I'll say is the biggest table stake is the need to evolve and ensuring that when you're looking at talent gaps, you build a plan to fill those gaps. And that's what we've done this year. And I don't think that, quite frankly, I don't think if you aren't able to acquiesce to what's happening in the industry, then you're never going to be successful in terms of your P&L with that particular organization. So you have to go where the people go.
Well, excellent. And I know you're answering some of the audience's question because they want to know, how do you recruit in this labor market? It's dynamic and there's all these layoffs, but still a tight labor market, and capturing the heart and mind of people, as you said, Kelly, that's a key. To your point and the importance of people, I'm going to rephrase something I heard Bill Gates mention about Microsoft. If you don't have the 5% top people in Microsoft, it would not be the company it is. That's so important, the people who work for a company. How about you, Trent? What would you say? Are you seeing any of the impact of these layoffs and the market? How is that affecting the dynamic of recruiting for your company?
It's and this is somewhat new for me. It's affecting not the US, it's actually affecting our efforts in Latin America. So as more people start looking to still get their projects done and looking at the resources nearshore, is driving up the price of what's going on in Latin America. So from a compensation standpoint, you know, we pay our people in USD. So I get kind of perplexed because I'm having to watch the US market to see, is it going down, is it going up? And then also look at the LATAM market, is it going down or is it going up? And I'm in 12, 14 different countries. I can't look at the currency for all of them. So you kind of have to have a little bit of a strategy of saying, okay, if this, then that to a certain percentage, and I hope to God that I'm right. And you know me, I like data. I like to be like 70 to 80% in the right, more like 80 to 85 most of the time. And I'm having to learn to get comfortable with, I feel that I'm 70% correct, and I'm just going to have to pull the trigger. The other thing that we're seeing is that a lot of our candidates in Latin America are seeing what's going on in the United States, and they're getting a little antsy. I don't want to move from the project that I'm on now with my current employer and come over to you. Our size for some of the candidates, they like it because they want to feel entrenched in something, like they actually have value, like they can actually help move the ship rather than just being a clog in the wheel. So for those, it's good, but they're still apprehensive. For those that are just chasing the dollar, they're going to chase the dollar from us to some of our competitors. It's just going to be what's going on in the market is completely irrelevant with that particular sector. But for those that we really target after, we really lead with our brand strategy. We lead with who we are, where we come from, what's our plan. And we really focus in on, and I know it sounds cheesy, but we really focus in on our core values. We, before me, we create raving fans, we hire entrepreneurs, and we talk about that in the initial pitch. Because if they can get locked into the brand, then everything else becomes a lot easier. And so we've really, that's always been my approach, period. But I've really had to work with the recruiting team to kind of shift, because just putting a butt in a seat in this kind of a market is not a good strategy. It's never a good recruiting strategy, but especially in this kind of a market. So we've really kind of doubled down on our branding, both at the corporate level, but then also too at the TA and the delivery level.
Out of curiosity, any here pays with Bitcoin? I heard that's becoming a trend. Okay, so a trend your company does.
We offer through our payroll provider. You can put a portion of it in crypto, and then the rest of it be paid out in USD, and then you can take it out and get colones, pesos, wherever your local currency is. Yeah. But I guess the other little effect is that what's going on in the United States affects some of the countries that we operate in, and it affects their economy. Like what would be I guess a minor wave for us is amplified down there. So we really have to kind of keep an eye on what's going on in all 14 economies.
The research last year shows many emerging countries, the trend is to accept payment with Bitcoin, which is probably not surprising, but not US based.
It's more sturdy. It's more stable, I think, compared to local currencies. So I think Brazil, Zach, was it Brazil that just hit like 100%, or Venezuela? It's one of the two that just hit 100% inflation. So
Argentina.
Argentina, I knew it was one of those. And it's unreal. It's like you can take your dollar bills and use it as wallpaper to be a lot more functional than it would be actually trying to use it on the street. So, being able to deliver in US dollars or in some type of crypto, there's a lot more stability for the employees.
So I do want to take the conversation to the next question. And Zach, we're going to move. So I hope Zach didn't freeze on me. Or here he is. All right. We're taking the conversation into RPO next. And I know some of our panelists work with RPO, so I'll get their perspective. But from your perspective, Zach, given all these dynamics, RPO remains a very sturdy solution, if you will, talent acquisition solution. So make the case for us. Why is that?
So again, I think getting back to the trains analogy from earlier, I think, there's a couple of camps of organizations that are trying to figure out where to get started. I think they know they want to get access to some of the new talent coming into the market. I think they know that they have, recruitment or even hiring infrastructure problems. So when we get into the talent acquisition teams, the TA teams, they're hanging out there with job requisitions that aren't designed for the new talent, or they have a mix of old and new that have repetitive infrastructures underneath them. So whether it's from trying to develop even skills ontologies to slip under the job descriptions and figure out how to strategically pull those together to match what's available in the market to what they need and how to bring it together, they need a strategic partner. And the consultants only go so far. And oftentimes for organizations, especially talent acquisition organizations where budgets may not be as big, trying to first contract with a consultancy and then switch that over to the internal digital infrastructure and then translate that into the recruitment teams, that takes a lot of time and a lot of money that they may not have to stay competitive with their peers. So one of the advantages that RPO brings to the table is the deeper strategic partnership guidance by bringing the market, all of the market intelligence around, what's going on in the external market, bringing that to the current talent organization and giving the talent organization the insights to then go, clean things up internally on their own and build those matches, while at the same time the RPO is out in the market, focusing intently on specific positions or specific skill sets to not only recruit candidates, but get them all the way to the end and fill those requisitions before they go on to the next. That position specificity and that skill specificity, as organizations are undergoing any kind of structural change or transformation, digital or otherwise, is incredibly important in times of change. It feeds the organization's ability to stay adaptable to changes that are beyond its control. And that to me in times like this is what elevates the proposition of an RPO, far and away above that of, just a generic inbound recruiting team.
Thank you, Zach.
Yeah.
And
just
let me see if I could jump in on that. As a practitioner, there's a, you've got the hard cost of what you pay for and what you get out of working with an RPO. But then too, the thing that I always liked working with them is that it's like I have my own personal consultant that can look across industries. So I can compare the data that's going on in my organization and ask them and say, is this normal? In my industry and outside of my industry, what are you seeing? And then also having, because RPOs are known to be very efficient, high volume, not sacrificing quality. So there's some things that if I'm running an internal organization or TA organization, there's a lot of things that I can learn from working with an RPO that I can implement and be able to get some cost efficiencies on the internal side without sacrificing the hiring speed and the hiring need that I have for my client.
And to build on that, Trent, I think when I did the market analysis to see how talent was moving and kind of see that this, again, the great realignment, as I never really refer to it as the great resignation, happened in stages. So when you look at the tail, we're looking at this great realignment of talent to where it's most needed in the market and eliminating some of these bottlenecks. As industry grapples with geopolitical issues, economic issues, and automation, and not necessarily being the only economic driver of growth anymore, or the only economic pressure anymore, that RPOs were some of the first to recognize where those talent movements were going as I was working with them. So, whether I was working with talent acquisition technologists or I was working with recruiters or even sourcing and screening teams, the RPOs were the ones that really had their finger on the pulse.
Very good. So Zach and Trent helped me paint the picture of RPO, to use Rob's word, resilient solution. I want to continue with Kelly and Rob, if you want to help us understand how, for you this year, are you finding your RPO plans changing? Is your outlook for this year looking different than what you expected? What changes are you having with your RPO engagement based on all the dynamics that we described today?
I wouldn't say anything's changing per se. I think Trent hit on it a little bit about the competitive advantage piece, which is huge. Instead of having to go out and hire market insights or a third-party consultant to come in and tell you what are some of the leading indications going on in the labor market, within an RPO looking across a variety of their industries based on their customer portfolio, a lot of times they can come back and tell you, hey, these are the things we're seeing within automotive. These are the things we're seeing in manufacturing. These are some of the changes that other customers and clients that they work with within Reason are making. So I think it's just as we're all on this call and everyone's listening in, trying to get a grasp on insights and data and trends. I think anytime the market shifts in any way, shape, or form, usually the first punch is within the labor and the talent arena. And so the RPOs are typically the leading indicator and see it first before anybody else in terms of companies changing and hiring freezes and who's doing what. So I would say maximize the ability to leverage that market intelligence and look at competitive intel that they can provide, and then take it as it comes and use that to innovate what you're doing within your own particular company. That's how we've been leveraging our partnership.
So I know market intelligence is a big value for the RPO. Scalability is also, we know that's a big value. And Rob, I don't know if you want to talk to that point or something else. Go ahead.
That's a great segue, actually, Maze, because that's exactly what I was going to say. So we work with three different RPOs in three different markets. And I think the reason for that is because, number one, as I mentioned earlier, the type of company we are, focusing on human capital management, risk broking, et cetera, we know what we're good at and we know what our core competencies are. We were looking to scale technology recruiting last year and this year. And so we wanted to arm ourselves as a strategic partner like an RPO who would have that as a core competency. We're looking to scale and on an interim basis. We may not be hiring at this level, for the rest of let's say the next 5 years, but we are looking to do that now. And so in addition to having those talent insights and market intelligence that they have definitely been providing us, because it's their core competency, they have a lot of tools in their toolkit. And as Trent mentioned as well, they are doing the same thing for other companies and they know what's working well and what isn't working well. And so we've been able to benefit quite a bit from that. And then we also use them in the Americas for some of our seasonal hiring as well. Again, where it's very cyclical and we're looking to scale relatively quickly. And we do that on a repeatable basis year over year.
Fantastic, thank you. And I noticed that the panelists helped me answer some of the audience question. If you want to bring them to the Audible conversation, please go ahead. I see that we have a couple of minutes and I know some of you have to go to other meetings. I want to end with one last question for all the panelists, and then we'll take audience question as well. So for our closing question, we want to give the audience something to take away with them. So I want to ask each of you to summarize one or two key takeaways from today's conversation. And I'll go with my screen, starting with Kelly, Rob, Trent, and Zach. So starting with you, Kelly, what's your key takeaways?
Sounds good, thanks. I would say you have to innovate in order to persevere in this market. So whether it's innovating your talent landscape, your training, your networking, your leadership style is another big one, to make sure people are inspired to come work with you and come be excited about what it is that you're trying to achieve. Also, innovate the way you recruit. So keeping a very close eye on what's happening in the market, job security, career growth, compensation, leading some of those, making sure that you're using those as your EVP and the way you describe your organization. So my takeaway would be innovate to persevere to innovate.
Awesome, I love it, thank you. And Rob, what's your takeaways?
First off, I think I would echo Kelly's sentiments absolutely. And if I haven't stressed already enough, I think resiliency is really important in a recruitment function. And I would also echo what Trent said earlier. I think what's interesting, if you're very data-driven, and it sounds like most of us are, in the last couple of years, you've learned you almost have to expect the unexpected, because despite the fact that your predictive modeling would suggest that you're going to yield the following outcome, there's so many external environmental factors over the last couple of years that come into play that have completely, changed the course of the trajectory. So I think you have to be perseverant, resilient, curious, to just try to stay ahead of the game as much as possible.
Rob, don't hate me for this, but you remind me of the federal chair. You're data-driven. We're going to look at the data before we decide. Very wise. Trent, how about you?
I'm going to ping on Rob and say, look at the data, but don't let it freak you out. Sometimes, especially now that, like I mentioned before, there's a lot of misleading data out there, and find your own data. Don't listen to the news. The news has always got a bent. Go out there and find the facts out for yourself. I agree with Kelly about iterating and use, and the big thing too is don't forget your team, like the stress that you're under, don't forget that your team's under that stress too. So make sure that you give them some love, because they're the ones that are focused on the candidates. They're the ones that are fighting in the trenches. make some time just to invest in them and continue to reskill them and get them ready for the upcoming market changes.
Fantastic. I love it. Give your team some love. How about you, Zach?
So I will reinforce what's been said so far, building on Trent's concept of find your own data. I will tell you that for the market analysis on how labor is moving, didn't have to survey that independently at IDC. BLS data, OEC data, data from the Fed, data from the UN ILO, it's all available. And when you start to bring those statistics together versus, as Trent said, what you're just hearing on the news, you can start to see how they're moving with respect to each other, and anybody can chart it. Anybody with Excel can chart it. If you're good with paper stats, you can chart it that way too. And you can start to see how these lines are changing respect to one another to really see what the underlying story is. One data point does not define your organization. It also doesn't define the market. I think at the end of the day, it's also just really important to be able to embrace risk in the flow of change. We've spent so many years as organizations trying to quantify risk out of our equation, and all that's done is make work riskier for our employees. At the end of the day, embrace some of that, take a chance, follow your gut, and don't be afraid to speak up and ask questions. That's how you're going to find the answers that you need, and that's how you're going to be able to move ahead with new strategies. And most importantly, you're going to have to be strategic.
Well, excellent, and great reviews from our audience. Thank you so much for our panelists today, Kelly, Rob, Trent, and Zach, and thank you for our audience. Please stay connected, stay engaged, and stay informed of what's happening in the talent and the RPO world by tuning into the RPOA, the place to go for RPO. Thank you, everyone. Great panel.
Bye, everybody.